Morning, everyone. My name is Anae Agostini. I'm CEO of CID Insurance Programs. I am welcoming you to our apartment insurance quoting made simple webinar this morning. And I want to introduce also Michelle Belden, who's our apartment commercial underwriter. Say hello, Michelle.
Good morning, everybody.
And then I want to introduce Jacob Cole as well, who's our marketing specialist. He's the behind-the-scenes guy that makes all of this work. Say hi, Jacob.
Hello, everyone.
Okay, so if you I don't know, we've got quite a few people on. Some of you are going to know a little bit about building coverage, apartment insurance, and some of you are not. So the one thing I like about this, this type of risk, it's property driven. So once you get the hang of, the things that you need to know how to write apartment insurance and do it well, because it's all in the submission, a good submission of information, then you can drive some nice premium into your agency, and that really will help you build a bigger commercial book, and that's the key. So let's get started. So what are we going to talk about today? Objectives. Understand and recognize the different types of residential buildings. We'll get into more of that, but there is a little bit to know about that. How do we underwrite an apartment building risk? What's a good building to write, and what's a building to stay away from? And then let's talk about the property components and how you would insure them, because there's, each apartment building is going to be different, and you're going to need to be able to establish what you've got. And then Michelle's going to talk about how to better understand how to prepare a quotable submission. And that's really, as I said before, the key to making this all, to getting a competitive quote for an apartment. Okay, so let's talk about defining this. So really, an apartment building it's called a residential structure, right? We've got people residing in the building, and you've got multiple individual apartments that really creates a definition of an apartment building. Every building can vary. Sometimes you have outside entrance to each of the units. Sometimes you go in through a main entrance, and then you're going in through interior hallways to the unit. So really, you have to establish what you have and look at the building. So that's part of the definition. Also, when you're talking about commercial insurance, there is a minimum underwriting criteria of 5 or more units. So, and that's for commercial insurance, okay? So you can have multiple buildings. You can have like 10 buildings with less than 5 units, as long as the total units of all the buildings is greater than 5. And by the way, feel free to ask questions as we go along. You're going to want to ask those. You're going to type them out in the chat area, and we will answer them as we go along. So that's really important. So if you have any questions about this, just chat in your question, and we'll be here to answer your questions in the moment. So last but not least, what do you do with those 1 through 4? Well, there's carriers available to write the 1 through 4 unit apartment buildings, but there are some restrictions in California on writing property, and it's all tied to the earthquake coverage. So they can definitely write LLCs, corporations that are, but it's the personal insureds, the individual that is trying to insure the 1 through 4 is where it gets trickier in California, because they have to offer the earthquake. There are carriers that can do it, and you're going to want to talk to Michelle if you have a situation like that where it's an individual name. Okay, so that gives you a little bit of information about definition. So what are the types of buildings? Okay, apartment buildings I've already defined, right? In some cases, you could have mixed-use buildings. You definitely could have retail units on the bottom, and then you could have multiple stories of apartment buildings. Apartments are becoming very common now because the rents are very high, and so you're finding that developers are building apartment buildings, and it's not, and it has a lot to do with the building departments and some of the things going on with being able to get things through the building department. So more developers are building apartment buildings rather than what our third item is community associations. Now, technically, a community association is an apartment building, but I wanted to put it on here because a condominium association can look very much like an apartment building, right? And so the building, what's going up in new development now is mainly apartment building, not community association, but they're still building, and building is actually picking up. So developers are building again in California and multiples in the surrounding states. So you're going to see that. I think the slowing is that the sale of homes has slowed, and so they're building more apartments because you can get higher rents from that. Last but not least is cooperatives, which is an unusual beast. There might be a few here in California. You see them on the East Coast, especially in New York, a lot more. It's sort of an odd combination of a community association and apartment building. And I'm not going to go into any details on how it's run, but and you just have, it's really an East Coast item, and most of you are probably in the Western states because most of our brokers that do business with us are within the Western states. So I think we're good to just mention it and move on. Okay, so underwriting guidelines. So here are the things that you want to be considering. This is information that you will need if you're going to be submitting an application to us for a quote. You will want to know your tenant rent roll. And so in some cases, and I'm just going to explain this real quickly, is some carriers will write a BOP, right, a business owner's policy. Depending on the property values, it will either vacillate. The lower property values will probably drop into a BOP. The higher property values will potentially go into what is called a package. So your BOP will have your actual loss, your business income, actual loss sustained, whereas your package will end up needing a specified rental amount, and they'll ask for an annual rent roll. How much are you getting in rents per year? And then it actually is it's rated out on a package policy. So that's going to be important. You would not want to miss that coverage. The other thing to consider is, do you have vacancies? And vacancies can be, Michelle, is it 30% that they'll go up to?
Some carriers, yeah, max would be 30. I would say 20 to 30 is generally, but 30 would be the max.
Okay. So you don't want to have more than 30% in vacancies. And that it's not as much of a problem because, business is picking up. We're not in a recession any longer, and, you're not going to have, but we are writing still a lot of vacant buildings, and a vacant apartment building could be considered something that has over 30% in vacancies. And then you would need to buy a policy like that because it wouldn't qualify for a standard policy. And then do you want to know whether it's professionally managed or landlord managed, and why? Why? Because you're probably it's going to be the obvious. The condition of the building is probably going to be far more in better shape and maintained if it's professionally managed versus a landlord. And that's just because you've got a management company that's overseeing and making sure that a maintenance is done, whereas a landlord might be absentee and may not be paying attention. Again, let's talk about condition of the building. The age of the building can be a problem with some carriers. Some carriers just don't want to go past 25 years of age. But Michelle has lots of markets for the age of the building. They're going to be asking, though, have you done regular building upgrades to things like the HVAC, plumbing, electrical, and the roof? And Michelle can pick up later if I've missed anything there. And I talked a little bit about the maintenance of the building already, and that becomes, so the visual view of an apartment building can make or break you as to whether you want to be writing it or not, because it could become the nightmare apartment building that you wish you'd never gotten involved with if it's not being maintained over time. It sort of becomes sort of a slummy kind of building, and there's the potential for all kinds of things to go wrong, from liability to property losses. And so I'm just here to say that the quality of the building is important for you to be writing good business. Okay, what are some of the other things? Well, the number of stories is going to be a factor. Some carriers will not go over 3 stories, right? Some carriers, they just don't want to. Some will go up to 6. So every carrier is slightly different in that area. Some will go higher. And so Michelle can help you with what markets we do have available. Also, is the building sprinklered or is it not? 3 stories and above, typically on residential, is what's required to be sprinklered once you hit 3 stories. 2 stories is fine unsprinklered, and Michelle can actually elaborate on that if it's different, because underwriting changes all the time, by the way, so never assume anything. You always want to check. And then I'm always, looking at the maintenance of the building. So if you've got uneven concrete, you're probably going to have a trip and fall liability loss. There are a lot of potholes in the parking lot. You're going to have a potential trip and fall there as well. So things to consider. And by the way, all of these items that I'm talking about right now will be picked up under loss control inspection, which is done within the first 60 days of the of writing the policy. And so they're going to be looking at the stairway, upstairs stairway, and the railing picket width. And building code in California is 4 inches. Some of the carriers will go up to 6 inches and not, and not, have a problem with it. But if you're over 6 inches, it can become a serious problem as to they're either going to have to make a change, and that one tends to be an expensive change that, when they have to upgrade that, you have to figure out how to do it. And that one's a little more costly. The uneven concrete and patching the pothole, that one's not so bad. And then, is there a pool? Is it fenced? Those are questions, because there's a rating, a liability rate for the pool, so you have to include it because it will get caught on inspection, and they'll add it, and then the premium goes up, and no one's excited when that happens. So, and you do see a lot of these custom or very old boutique kind of apartment buildings where they might not have a fence pool. So we're probably not going to be a market for those, but I'm sure there's someone out there that can. We think those are a lot riskier to entertain, so we just don't have markets for that. And then last but not least, they're going to inspect for fire extinguishers being attached to each of the buildings. And that is another really important factor, because you're right, you don't want to have a fire where you don't have an extinguisher available at the time the fire starts. Okay. So how do you insure apartments? Okay. You want to accurately determine how many buildings there are. So you could have just one building. So that's really easy. Then it's like one building, 6 units, and then you would know your square footage of the building. So all of that helps. But many a times you've got multiple buildings, because I've been around insuring apartments for almost 25 years now, so I've seen a little bit of everything. So, but typically you're going to have multiple buildings, and that's, you need to break out each building separately. Michelle's going to talk more about that. So any component that's attached to the building, you would want to include that, a value for that as part of the structure. So the part of the insurance, the value being established for the building would include that, a component that's attached. What's typical? Usually it could be walls that are attached directly to the building. It could be some kind of garbage dumpster. It could be you name it. There could be something attached. So if it's attached, it needs to be insured as part of the building. Any component that's not attached needs to be separate, right? It needs to be a separate line item with a separate value attached. And then the other thing to consider is, are there attached or standalone carports or garages? So that becomes a factor, because when you determine the building value, the structure rate versus like a carport or a garage rate is, the carports and the garages are going to be a lower rate, because they're just such a simple structure. There's no plumbing, there's no anything tied to it, so it becomes a much easier, less expensive. So you want to always break out that portion square footage wise, and then make sure you're establishing a value for that. Okay, so let's take a look at this. I put a few of these up so that you could get an idea. There is, so let's look at the picture on the right. You'll see that it looks like they're separate buildings, but it looks like there is maybe just a thin wall between the two, a door, and then a little top piece that connects the roof. Let's just say that is like one continuous building. So anytime it's touching, one building is touching the other, even if it's only the roof, it's still considered one building. So it's really important. That's a big thing. We get a lot of submissions where it's not accurately portrayed because no one's really thought about the fact that if any portion of one building is touching the other building, then it's going to be considered all one building, so not two. And that becomes a challenge, because the rate for one big building with lots more units in it is higher than if you had two buildings with less units. So so that makes it not so fun. But on inspection, you're probably that's going to get caught, because they're going to go around and measure and check the square footage. And so you would want to, and by the way, Michelle always goes in and looks. She goes and Googles to see, and she'll usually, take a look to make sure that you've accurately portrayed the building square footage, and whether it's one or two. And then on the left, you can see that, you've got some areas where things are touching, but then you can clearly see with some of the buildings that it's completely separate. So all of that would have to be addressed. It almost looks like on the left-hand side that there might be a connection. I can't see, but you've definitely got some definition and separation of buildings. Okay, and then let's look at, I have one more. So here's a couple more. The one up in the left top, you can clearly see that those buildings are what they are. It doesn't look like they're connected anywhere. They're separated enough. There's a parking lot between them that so you don't have any connections. The bottom left is one where you see the connection I was talking about with the fencing that's connected to the building. So it would be part of this building structure because it's attached to it. Interesting. Look at the bottom right-hand corner. See that it's like a trail, a way to go from one building to another on the top of the roof, and that connects those buildings. So most likely, if there is a fire, they would probably have to insure this as one building, the two combined as one. And also, look at the top right. Look how modern that is and how cool it looks. But my goodness, there's a lot of things connecting to other things. So those kind of things that could easily cause this to become a join, two buildings joined together. So because they're connecting to so many different things, looks like they're connecting to other buildings. So just those give you a little bit of an example, and I am going to turn it over to Michelle to talk a little bit about the property valuation.
All right, thanks, Lene. So I want to talk to you guys about a statement of values. So as Lene was mentioning, if it's one building, it's pretty simple to insure because you only have to worry about one limit for the building, and then you would only be concerned about, the other components. But when there's multiple buildings, most of our carriers don't offer blanket coverage, so we need a breakdown of the buildings. And even if they do offer blanket coverage, I still need a breakdown of the buildings because they're going to want to know building A is this value and building B is this value, and so on and so forth. So a statement of values for us, it breaks down multiple building complexes. It could also be if an insured owns, let's say, 4 properties, and maybe each property is only one building, but they want to insure all of them on one policy. Again, I would need a statement of values for that because it would break down each location for me as well. So it could be by location, or it could be by building, or I'm sorry, by location with the number of buildings there. So it breaks down the buildings by the number of units in each building, the total square footage, and then your property valuation. And then for us, the property valuation is going to be generally a set number times by the square footage. So generally in California, I see anywhere between $100 and $175 a square foot. Again, it's going to depend on what components are in your building. Is it like a 4-story building that has an elevator? That's going to increase your cost per square footage. So it's really going to depend on those kind of things that are in the building that can determine your cost per square footage. And then, can we go to the next slide, Ane?
Ready for the next slide?
Yes, please. So this is an example of an SOV, statement of values. SOV is what I call it for short. So if I ever say that to you and you're like, Michelle, what are you talking about? This is what I'm referring to. So this is just kind of an example just to give you an idea of what we would be looking for. So you can break it down, like I said, by location and by building. And so it gives you the total number of units, the cost per your square footage per that building, and the cost per square footage. And then we have another section below where it lists out the different types of components that there could be at the property, garages that are detached or carports, if, there's a clubhouse, a fitness center, they have a laundry facility, anything like that that's not a part of like the individual building itself, you would be wanting to list that out. Again, the pools will have a rate for it. Same thing if they had a playground, there would be a GL rate for that as well. So they're wanting to rate for all that. So as long as for those ones though, you're not generally necessarily going to have like a cost per square footage on that for like the pool and the playground and things like that. It would just be how many of them there are, and then you would need an evaluation for the pool and the playground and so on and so forth.
Right, and the interesting thing about this, Michelle, is that this is really, you're asking only for property values. And so I don't want anybody to be confused by when you look at the other property and structures, you'll see things like a pool, right? A tennis court, a playground. All of those things have property components. If there could be property damage to those that due to a peril, but and so that's what you're trying to define, whether they're wanting to insure the property components of those particular, the other property that you're seeing listed out there. They will be rated. All of those will be rated for a liability exposure automatically when they're listed out. But you have to decide whether the insured wants to insure the property portion of those components. By the way, Michelle, is that available on the, do we have that available on our website?
I don't know if it's individually available, but it is. We do have a template built in with our application, which we'll talk about at the end, where you guys can pull applications for us, but it is a part of our application if you guys don't have one yourself.
Okay.
All right. So I kind of jumped into this slide already a little bit with just talking about how determining your building values and how to determine it. So how to determine your values. It's going to be based on your state. California's got different requirements than any other state and things like that. Your construction type, obviously, frame is going to be more expensive, and then that's going to play into it. How many stories it is going to play into it. And again, like Ane was saying, the quality of the building, it's definitely going to play a role, because if it's an older building and it hasn't been maintained and upgraded, we're not going to be able to offer you special form replacement costs. We would be able to do basic ACV, but again, if they're looking for that special form replacement cost, then you're kind of looking for pride in your building and the way they maintain it. So it's definitely something that they would be looking for.
Quick question, if the garage is attached or laundry rooms, we include all that in the building coverage, correct? That's the question. And do you want to answer that, Michelle?
Yes. So if they're attached to the building and the laundry room is within the building, then yes, you would want to be including that as a value in your room. So I know that most apartment complexes that I can think of myself don't generally have a standalone laundry room. It's generally part of one building if there's multiple buildings in there, somewhere in there. So you're wanting to make sure that you're including coverage for that. And then for the garage, obviously a garage isn't going to have the same, cost per square footage. So obviously if you say a building has underground parking, that cost per square footage is going to be less than what your actual residential living square footage can be. So, you're kind of having to layer that out to figure out your true building value. Could make it a little bit more difficult, but as Ane had mentioned earlier, there's not really a lot of maintenance to them. There's generally not any plumbing or anything like that in a garage, so it would just most likely be lighting that's in there. So you're just having the wiring of things to worry about in there.
So that's a really good point, Michelle. So I'd probably consider the garage maybe to be 50% in the cost per square foot than the actual structure itself. And I would break out the garage square footage versus the other portion of the building so that it's clear and to the underwriter that's going to be rating it as to how you got to your building values. Would you agree, Michelle?
Yes.
Okay.
All right. Next slide, please.
Ready for the next slide?
Yep. Okay, so I want to talk about the different types of coverages that we're able to offer for apartments. So property, obviously that's your big one. That's going to be your building coverage. If they have any BPP, if the insured owns, there's furnished apartments these days. So they are the ones that are providing all the furniture, so that would be their BPP. I mean, there's not too often that there's BPP for an apartment if there's not a laundry room. That the components of the laundry room could be considered the insured's property, but otherwise, if there's not a laundry room and you're not furnishing it, there's not too much BPP necessarily involved. And then your loss of rent, which I would refer to as the business income, as Ane mentioned. I would need a rent roll just to know what the annual rent is from the entire complex. And that is an important thing for us. Ane did mention that for some of our BOP carriers, we are able to offer ALS, which is true. However, a lot of them still would like to have a limit, just so they have a number. But, it's going to depend on the carrier and who's going to want to offer, who's able to offer ALS and who's not. But like Ane said, when you move into the bigger ones that are going to fall into a commercial package, we are going to have a limit provided for that. And then there's building ordinance, which there are 3 types of building ordinance. There's coverage A, coverage B, and coverage C. Coverage A is loss of undamaged portion, and that's generally equal to your building limit. And then there's coverage B, which is for demolition, and then coverage C is increased cost of construction. So B and C can either be their own separate limits or they can be combined. And generally, if they're combined, I generally see it at about 10% of the building limit for that coverage. And then you're looking at equipment breakdown, for the different components there. GL, obviously, is going to be a big one. Some people, are we're able to write monoline or package. Should, for some reason, you have to get off the risk and the package, there was a fire loss. The GL was fine. We can look at writing the GL for you and writing the property somewhere else and vice versa. So we're able to split that up. We're also able to include hired and non-owned auto, which I generally include, even if it's not requested on the application, I generally add that on there. Fidelity coverage, that's definitely becoming a big thing these days. Protecting the rents for the owner. That would be covering the funds of that for them. And then we also have a whole work comp department that Caesar runs, and he would be able to help you guys with placing work comp for an apartment.
There is a question. Can we get a questionnaire worksheet? And that's a great question. I don't think we have a sample of it here, but I'm going to let you know that we do have what I call a risk profile, and it's published on our website, and Jacob will send that out afterwards.
We do also have a slide included in here, Renee.
Oh, it is? Okay, perfect. So then they'll get to see it, and then and then we'll send it out to them tomorrow after the webinar. And then we have another, does CID mainly offer admitted preferred carriers coverage or E&S both? That's a really good question. So we try to be preferred to slightly hard to place. We really don't think necessarily the very hard to place is good business for our brokers, and we don't think it's good business for us because we're measured by our loss ratio. Now, you coming to us, you're not measured by our loss ratio, but we have to write good business for our carriers, and so we're always looking to write respectable business. And we've been talking about the quality of buildings, and that is sort of, so we can write both E&S and preferred, but E&S more, not in necessarily the condition of the building, but E&S maybe because of the age of the building. Would you agree, Michelle?
Yes, that's what I was going to say. Generally, we'll take a look at things that have, light losses, not, something with, that just had a $600,000 loss. That's definitely going to be something more hard to place. But I would say generally on our E&S, when I'm going to an E&S market, it's generally because of the age of the building and there just hasn't been updates. So your preferred or standard markets aren't wanting to take on that risk. So it would be going to an E&S market.
Okay. So there's another question. Do you have a good worksheet to calculate building ordinance in California? And typically with building ordinance, you either have a carrier who's only going to offer up to a certain limit, right? And that's as high as they're going to go. Or you will have a carrier that will go up to the full building limit on coverage A, correct, Michelle? And then B and C will be 10%. So that's the easy way to calculate it, is to use the building value for coverage A, and then they'll automatically include 10% of that for B and C. So hopefully that answers, because you don't really need a worksheet to calculate that. But please, if reach out to Michelle with any further questions on that, if you want to get more specific. All right, next slide.
Yes, please. Thank you. All right. So I kind of got into this. So most people are looking for special form replacement costs, and it's definitely something we are able to offer. As long as the building, really what my carriers are looking for, it's going to vary by market, but it's generally, as long as the building, as far as the plumbing, the wiring, the heating, and or the roof, I know some buildings don't have heating, so you can kind of kick that one out. But they're looking for updates to be within 25 to 35 years. It's going to vary by carrier, but that's generally the span on an older building. Obviously, if it's a newer building built within the last 35 years, then you're good. You're most likely going to be able to qualify for special form replacement costs. But again, like I mentioned, we are able to offer basic ACV, if for a specific risk for a certain reason if need be. Our standard limit is 1.2 for the GL. Some of my carriers are able to offer 2.4. If they're not able to offer 2.4, we'd be able to offer you an excess quote, and we can go up to a $10 million limit. Again, property limits, $75 million is probably our cap, but again, it's going to depend on your occupancy, where the risk is located. In a different state, it could be less or it could be more, and just other components. But I would say a good general rule of thumb for us is about $75 million for us. And then, as I've mentioned multiple times, we like the older buildings as long as they've had upgrades. I get a lot of stuff that was built in the early 1900s. Through now, I think I've even done a couple that were maybe built in the late 1800s. So we definitely are able to consider those and write them. And then, like I mentioned on our last slide, the different types of coverages we can offer. So we can write you a package policy that has, some people want just building coverage, be it building coverage and GL, and then some want all these other coverages, which really, if you're wanting to insure the risk properly, you should be taking in consideration they should have business income, building ordinance, equipment breakdown. Again, it's going to depend on the insured as well, because some people, want it very cut and dry and keep costs down, and if that's the way they want to go, that's the way they go. But we're able to offer you guys other coverages as well.
So a question here, Michelle. What is the turnaround time after submitting the quote application?
As long as I have all the information on an apartment, I would say it's generally about 3 business days.
And you know what? I just did some research on, we ran some numbers on that, and that's exactly what it came out to be, 3 days. Now, if you had it's the complete submission that's important, and Michelle's going to talk about that next.
All right. So this is our apartment risk profile, Ane kind of mentioned. It isn't an Accords or supplemental, but it is a good way for you, if somebody calls you and they're looking to get their insurance or get insurance through you guys, this is just a little cheat sheet, take down some basic information to be able to determine what coverages you're looking for, what the building looks like. So it gives you enough information to get going, so then that way you can, once you've gathered all the information you needed, you can put the Accords together and then send the submission over. I also like to recommend to my agents to use this, especially for new purchases. I get a lot of new purchases requests. It happens, and we are able to accommodate those requests. So we like using this profile is a good way for people to get the basic information to then get to a point where we can get to a quotable submission. Next slide.
So we have a question here,
Sorry.
And so I don't know what state you're in. I could actually guess it's either Texas or Colorado, which is where you have the wind hail damage issues. That at least from our experience, for the most part, those are the states that so you might be from one of those states, which we love those states. But yes, we can provide policy language or sample policy forms with quotes as requested, and that would give you your endorsement language as well, and it depends on the state and the carrier as to whether that there is the quote would include wind hail damage for trees and shrubs. So now I see that you're asking a question about D&O, and we're really not talking about D&O here, because an apartment building is not a nonprofit organization. So you might be thinking of community associations or a condo association where, D&O, we've got a board of directors. You typically don't have a board of directors with a apartment building. You might have an entity that owns a lot of apartment buildings that has a board, and they might need that D&O, but it's not specifically tied to the specific property. So that we do have D&O for community associations that Michelle could help you with, and we've got a few carriers. So she could address those questions to you on a you could email Michelle, and you'll see her information towards the end here. And I don't know why. There we go.
All right. So how to get a fast quote for me? What I need, a complete submission, like I mentioned. So for me, that includes an Acord 125, 126, and 140. Your GL is going to be rated on for an apartment on the number of units. So that number is very important, and then also including the total annual rents is also helpful as well. We do have a supplemental that I can send out to people. Otherwise, if you've already completed a supplemental, I'm more than happy to quote off of that. Again, if I'm missing any information after I've reviewed the Accords and the supplemental, that if it's not mine that I received, I'm going to just shoot you an email and say, hey, this is just like last bit of information I need in order to quote this one. If it's something that I can get away without needing to quote, I will bypass that for you, and I would just throw it on my quote as a binding subjectivity if need be. If they have prior coverage, loss history is always helpful. It's especially if they've had losses. If they've had losses, what I need to know about them is what happened to cause the loss, how was the loss, what steps were taken to remediate the loss and to help prevent future losses of the same instance from occurring again. And then if the loss is open or closed. If they have an open loss, I would generally, pretty much the only thing that's available to me would be going to an E&S type market if they would take the risk. None of our preferred or standard markets are really going to be looking at things that have any open losses. And then, also claims frequency does also can play a role sometimes. If they had one-off loss, they've been clean for 12 years, and then they had one-off loss, but, that's great. They're good. So that there's things out there that can play a factor in it. And then a target premium. That is helpful for me. I'm going to go through each risk, qualify it with the markets that I'm able to quote it with. But if I have a target premium and I kind of been like, I've quoted a few with this carrier in the past couple of days, and they're coming in at this, and this submission that you sent me is pretty similar, I can kind of already know. So target premium is definitely helpful. And I mentioned earlier as well, we can look at new purchases too. So I know that's a little bit harder sometimes to have a target premium on them because they don't have current coverage. So you're just kind of taking it out to market to see what is available for them.
Okay. Yeah. So Michelle, the previous one about the wind and hail, he says he's in Arizona, and I don't believe there are any restrictions with wind and hail in Arizona with our carriers. Are you aware of it?
Think of.
Yes.
No,
it's only
more
been
Colorado
and Texas. Yes. And then I have another question. What is considered an upgrade for electrical, plumbing, and HVAC? And then I'm going to turn it over to you, Michelle, but I'm going to preface this. That's an interesting question. I think, you can be really smart about how you answer these questions because sometimes there's some unknowns, and so you can only do the best that you can do, and then a visual inspection of the property should be able to support that. So you're insured giving you information. It should be adequate as long as they can provide some basic information on what year the specific tasks were, or the maintenance issues were done in. Would you agree with that, Michelle?
Yeah. So I know there are some markets out there that require permits for confirming that the electrical, the plumbing, and heating have been upgraded. Fortunately for our markets, they're not looking for that. They're looking for a year. But when they go in and inspect the building, obviously they're not going to be tearing out the wall to see what the electrical is and things like that, but they're going to be confirming with you. Generally for the plumbing, you're wanting to see either copper or PVC. For electrical, you're wanting it to be on circuit breakers, and anything that is Zensko, and what's the other one? Sorry.
That's okay.
escaping my mind. The other type of electrical panel that most carriers are telling you is a hazard because they easily could cause a fire. So we're just looking for those current things. And then same thing with the roof, wanting to make sure that it's all in well condition. Again, if they have older things, as long as you maintain it, I mean, then you're on the right course.
Okay. So there's another question on loss history. Do you need 3 to 5 years? Can you use a no known loss letter if they can't get the hard copy loss runs? And you can quote without loss history and just make it a subject to. However, if they know they have losses, it's going to be important to have that loss history.
That is correct.
Okay. Got it. I hope that answers your question. 3 years is acceptable. It doesn't have to be 5 years. That's been my history. That's been my experience. Obviously, the more loss history, the better. But 3 years, I believe, is acceptable for most carriers. Is that correct, Michelle?
Yeah, most carriers, it's just going to, it's going to depend on the carrier, 3 to 5 years. But again, they might only have 1 year loss history because it was a new purchase the year before. So that is fine with my carriers as well. So it's just going to depend on each risk individually.
Okay.
All right. As I mentioned, we have all of our applications, not just for apartments, but for all products that we're able to write. Pretty much all of them, I should say. We have applications available on our website where you guys can pull down. They're all fillable, so you don't have to print them out and handwrite them. You guys can type them in. Super simple for you. With our apartment application, the way it's stacked, the first page kind of just gives you like a little cheat sheet of basically the information I'm looking for. Obviously, you might not have all that information on there. I think it has the Acord, supplemental, and SOV. That's only going to be applicable if there's multiple buildings or multiple locations that you're looking for me to quote for that insured. Target premium, I can't remember everything else that's on there, but it just kind of gives you a little checklist to go off of. And then we also have an SOV on there. You guys, if you have your own that you use, feel free to use that one. We just include that for those who don't have a copy of it. We like to try to make everything, the different resources that we have, we try to make them available for you guys as well. And then it would be your Accords and our supplemental is in there as well.
Okay, so I want to thank you all for joining us. I thank you for your patience. We went over by quite a bit, but we had a lot of information that we wanted to get to you. So make sure you visit our website for all of our marketing tools and our templates, and view our upcoming webinars. And you can watch this webinar on our website as many times as you want and have other people in the office listen to it as well. And again, Jacob will send out a link to today's webinar along with the risk profile for apartments, and then submit your applications to submissions@CIDinsurance.com, and then with any questions, contact Michelle. You can see her email address and her direct line there. Thank you so much for joining us today, and have a really good day.
Thank you, everyone.